So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, Kirk here again, and welcome back to The Daily Call. On today's call, we are going to answer the question, what is Theta Decay in options trading? And more importantly, how does it work, or what do you need to be aware of? So put very simply, Theta Decay is one of the Greeks that's involved in option pricing. Now, it doesn't tell you what an options price is, but rather tells you what the options price could do over time as different factors change. So theta specifically refers to the time decay aspect of an option contract. So I always think about it as T for theta and T for time decay. That's just a very simple way to kind of associate them together. So the time decay aspect, or theta decay, of an options contract basically means that as options contracts near their expiration date, they start to lose value at a faster and faster pace. And it's because option contracts are wasting assets, meaning they have a finite life. They expire or end their life cycle at different expiration dates in the future, whether it's a year out, 2 years out, whether it's 10 days out or 30 days out. As they get closer and closer and closer to their expiration date, the value starts to erode because they're running out of time. They're running out of time to be profitable or not, to make a big for the stock, to make a big move higher or not, or whatever the case is. Now, theta decay, if you graph it, and you can search online, we've got graphs on Option Alpha, so you can just search theta decay or time decay on our website, and you can find these graphs. But theta decay, if you graph it on an X and Y axis, starts off very flat. So the further you are out in time from expiration, the flatter or the minimal impact you'll see in the options contract because of theta decay or time decay. So if your option contract is, say, 100 days out from expiration, you may only lose $1 or less every single day to time decay. Now, those option contracts are also going to be worth a lot of money because they've got a lot of time. They've got a lot of time for the stock to move. It's got 100 days to move, right? And so as you get closer to expiration, that theta decay starts to speed up, and it speeds up at an exponential pace, meaning the closer and closer you get to expiration, it starts to speed up until you're starting to basically lose a significant portion of the option contract every single day, just purely because of the theta decay. What I think about is, when I think about decay, I truly think about like wood rotting. And so say you have this bucket, and this bucket is filled with water, and this bucket then has a slow drip in the bottom of the bucket. Well, over time, that slow drip starts to erode the wood away, and now you have a bigger drip, and then it's starting to gush water until the point at which it just absolutely opens up the floodgates, right? And all the water comes rushing out. That's the way that I think about theta decay with options trading. I think about this slow drip that seemingly doesn't have any impact, but then over time, it starts to really erode away the value of the contract faster and faster. Now, when we just use some like simple pricing here just to kind of prove this point. And I'm looking at the SPY right now, which is a major market ETF. The SPY options for January of next year, and the time I'm recording this, those options are about 74 days out from expiration. Those options have a theta decay of just $1. Now, they're worth $446, and these are the at-the-money contracts, but they have a theta decay of just $1. So every day, no matter what happens, they're going to lose, just purely because of time decay, $1. Now they can make up that dollar by increasing, or by the stock increasing its price and going up, or the stock going down in price. It doesn't matter. So theta decay impacts both sides of options contracts basically the same, meaning that theta decay is a constant erosion of value, whether you are long calls or long puts. As an option seller, this is premium that you get. This is a benefit to you because you want the value to go down. So again, these contracts that are out on SPY 74 days have a theta decay of just $1. Now, if we go in substantially to 39 days, so 39 days away, the theta decay has now increased to $3 a day. Now, the value of the contracts has also come down to $3.31, so $331. But now the decay is starting to become more of a presence. Again, it's not significant at this point, right? I mean, it's a couple dollars a day, which, again, if you're an option buyer, maybe you're willing to pay that premium. If you're an option seller, you're kind of collecting this as little income on the way, but it's not significant really that much yet. Now we get down to the contracts, which are just 11 days to go until expiration. So 11 days. And now we see that Theta Decay is now up to 0.7. So now Theta Decay is really starting to increase. Now every day you're losing about $7 in value, no matter where the stock goes. Again, the stock can still increase in price and that can overshadow or offset the Theta Decay. But basically your option contract has to figure out a way to gain at least $7 of value or more to compensate for the increased Theta Decay, right? It's got to gain that much value or more. Now that we go down to the weekly options, which at the time I'm doing this recording are about 2 days away from expiration, now we see the Theta Decay of $15 a day. And this is kind of crazy because the options are worth, the at-the-money options are worth $36. So you can see in about 2 days, they're going to be worthless, right? So now you can start to see the impact of just a single day on these contracts, how it's just exponentially increased the impact and the decay on the contracts. We went from, $1 to a couple dollars to $7. And now we're getting to like $15 of Theta Decay in these contracts, which is pretty significant. So as you get closer to expiration, the need for the stock to make outsized moves, meaning like unexpected, huge, large magnitude moves to compensate for this Theta Decay becomes really apparent. So that's why, for option sellers, this is when we really start to increase our potential profit is kind of inside this 30-day, 45-ish day window. That's when Theta Decay starts to really accelerate on contracts, and hence why we found in backtesting that ends up being a pretty good time to enter short premium trades because we start to take advantage of that at kind of the most optimal time. So hopefully that helps out in just, again, understanding how this works. Again, it's another avenue to options pricing, which is not your typical straight line path that stocks follow, where the stock goes up, you make money. With options contracts, a stock can increase in value or decrease in value. And depending on how you're structured and how the trade is structured, you could lose or increase your potential profit. And Theta is one of those things that's just this constant erosion of value that gets paid by option buyers and that ultimately gets collected by option sellers. So hopefully this helps out. As always, if you guys enjoyed these, let me know. Please post a review if you've been following along in some of these daily calls. If you haven't yet, that's the best way that you can help us out and spread the word about what we're trying to do here at Option Office. So again, if you haven't posted a review online in iTunes or Google or iHeartRadio or wherever you listen to, please help me out by doing that. And as always, if you guys have any questions, let me know. And until next time, happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to play smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.